All right, buddy, it's time to go live. It is 5:30 p.m. Central Time, Tuesday, November 29th, 2022. First video back from Thanksgiving. Hope everybody had a great Thanksgiving Day break. We have got a great report for you, and a poll is up. We're going to do a real quick sound check. The poll is how long before buyers cannot find any more silver. There's 4 options there for you to vote in the poll. We like to do polls on the live stream just to see what you guys think and to see maybe what we need to bring to the channel in terms of new information and new education. And we do appreciate your feedback there. Thank you to Neil and Original Intent and Rookie for being here on the broadcast. Today, we're going to be talking about the interim silver market report from Silver Institute and why that report shows that the deficits in silver are exploding. And when we say deficits, I mean the amount that's produced by the mines and the amount that is available, or the amount demanded by the market. There's a lot more being demanded by the market than is being put out by the mines, and that statistic is widening and getting worse. So essentially what it means is it's going to be very difficult to find silver in the future if current supply-demand dynamics continue as they are. So without further ado, we're going to jump into the report. This is from the Silver Institute. This is interim silver market review. They also have a year end, which I believe also comes out towards the end of the year, which I will go over when that information's available. It's put together by Philip Newman and Adam Webb of Metals Focus on behalf of the Silver Institute. And a lot of people will quote this report because it's one of the better ones put together in which they attempt to look at world supply and demand and put together a report. Now, it is sort of difficult sometimes in the precious metal space to do this because all the information is not easy to collect. And so I do thank Philip Newman and Adam Webb for putting this together for us and for the Silver Institute, having them do this work for them. Because I think it helps us understand really where the market is, where there's a lack of easily obtained information. So here's the biggie, the one why we titled the video the way that we did. The global exchange silver stocks are falling by 400 million ounces this year to date. To 1.3 billion ounces. And that means if you look at the London and COMEX markets, there's not a lot of free silver. And I would also point out that a lot of what is on COMEX in London are pledged already. So COMEX, the eligible category, is private storage. So even though the silver is there, it's not necessarily available. And in London as well, a lot of that silver is reserved for the ETF, so not all of that is available. I'm not sure because it doesn't say on this report whether they're talking about all the silver available on the exchange, including the privately owned, which may not be up for trade or available for trade, or if it's just the liquid inventories. They don't say here. I'm going to assume it's liquid inventories because I think they know the difference. But in any case, the trend is clear. There's a lot less silver available than there was a year ago because people are pulling it off. And on the channel, we've talked about this actually dating back to the beginning of 2021 during Silver Squeeze, that movement where people went into SLV. And so we know that the metal has been moving off the exchange that long. And the reason I'm showing this to you is basically a confirming report from what we pull. Now, when we pull, we go to original data sources like they do. We go to COMEX in London, and now we're starting to talk about Shanghai as well, which I think is becoming a much more popular and important market. But I did put this out there to show you that a lot of what we report is the same as what you're going to see reported other places. I wanted to talk about silver's underperformance because they're mentioning just the metals here, and they're talking about gold, silver, and then they're talking about LMEX, which I'm not going to get into. It's a different animal. But silver's down 6%, gold's down 2%. They're saying this is underperformance, and I've got to think that's qualified by meaning it's worse than gold. But I wanted to challenge this a bit from the perspective of I'm going to blow it out to the rest of the market here for a moment. Yes, silver is definitely underperforming compared to maybe where people expected to be to gold, which makes sense because when gold moves down 2%, silver can move down 6%. It's more volatile. That doesn't surprise me. And yes, it is underperforming where a lot of people may have thought it would be, but I will remind people that we had a big market sell-off, what looked like a margin call condition, a liquidity event across the entire global economy this year. And to say that silver being down 6% is underperforming the economy, I think would be not necessarily a true statement. And I don't think that's what they're saying here. I think they're just comparing it to gold. But let's look at it compared to the rest of the market. So here in stock charts, I basically graphed out gold, and I should have put silver here too. It's not that different of a story. And so we can add silver here too if we want to. It's probably, yeah, $ silver. So we'll look at silver as well. But essentially, if you look at the chart, the Dow, except for this furious rally, this is the blue line, the Dow, this furious rally dating back a month is the only thing that has gotten the Dow almost on parity with gold. Now, there is a higher sloping line here. So the Dow Jones has lost more than gold has. And if we hadn't accounted for this last month of furious buying of the Dow Jones, it actually would be a lot worse. The line would be down here and it would be the worst performing. Of course, the S&P, its slope of its line is much greater than either Dow or gold. Gold is nice right here. It is just, it's not bad. And so has gold perform worse than the stock markets? Yeah, I don't think so. I think it's actually doing okay. I think it's done better than bonds. I would have graphed bonds here, but essentially what we're saying with bonds is that their rates have gone up. And when their rates go up, it reduces the value of that bond, because when the rate goes up, the price has to go back down. So bond prices are going down. So if you're an existing holder of bonds, you're probably not too happy about bond rates going up above 4% on the 10-year, because all that it means is essentially that when you bought that bond, the value of that goes down. And if interest rates continue to rise, let's say they go to 5%, that means the face value of the bond that you're holding, that you may be getting 4.5, has to go down. So you may have lost money. You may still get your 4.5 yield, but part of the calculation of yield is a difference in price as well. So as bond rates rise, or as interest rates rise, the value of bonds that you're holding in your portfolio goes down, and it makes it more expensive to service by the government. Real quick sound check. Everything is going great. I think we have a lot of people in the live stream. Thank you, everybody, for joining. EC660 has joined. Raymond Flagstaff is here. Spiked Head Die Crack and Steve Hall have joined, as well as about 115 others of you. And today we're talking about how the new interim market silver report by the Silver Institute shows that shortages will be exploding. And I want to go back into the share screen as we get deeper into that. So back to the report. 48 million ounce deficit for 2021. That was the start of a new phase of deficits. Now, we did have an increase in mine production by 9 million ounces. So you can see overall that Kazakhstan, I think, pretty much led, up 7%. Mexico's up 6%. Oh, I'm sorry, Chile is up 25%. Indonesia up 19% in producing silver. But a lot of these places are down. The bigger producers, some of them are down. Russia down 6%. China down 3%. Sweden down 7%. Peru down 7%. Peru is a major silver producing nation along with Mexico. Bolivia down 4%. Argentina down 3%. So even though we're up by 9 million ounces, overall, not everybody's producing more. And some of that has to do with the amount of money going into finding new mines. And some of that has to do with maybe they just don't have the silver. There are a lot of new projects coming on. We preview a lot of these on Mining Stock Mondays when we talk to companies. Juanicipio being a big one, Las Chispas with Silvercrest, San Julian or Julian, Capella, San Jose, San Sebastian. There are some other ones there. A lot of them in Mexico really are going to be powering future production of silver, which is why I'm going to go down to Mexico and tour a lot of the mines in 2023. For those that are interested in the equity space, we'll do that. Stay tuned. So, but essentially, there has been a growth in production overall and from these places, but net, we're still down. We are still down a deficit of 48 million ounces in 2021. And we're going to get into the deeper deficits as we go further down this paper. Industrial demand is one of the major reasons it's causing deficits. It's up 5% to 539 million ounces. And you can see that resumed basically after COVID. COVID, you had a temporary fall because you had businesses shutting down. But then as soon as businesses opened back up, the trend that we had dating back to 2010 was we need more silver for industrial demand. And they've got it broken out on a report as to what type. You've got brazing alloys. Brazing is basically like welding in a way. It's a type of connection of two metals together using silver. Silver is used in brazing alloys. So a lot of plumbers will understand what that is. Electrical and electronics, other industrial, it's all there. India is importing much more silver. I'm just going to skip down to the money chart. You see here, they're importing a lot more silver than they have in the past. And part of that's because of capital controls put on gold, but also part of it's just because India is experiencing some economic issues, and the people there know that they need silver. They may not even be able to afford gold right now, but they're buying silver hand over fist. Of course, we can see in this screenshot that jewelry is up 29% to 235 million ounces. So jewelry and silverware is something that people are buying more of. That's up almost a third this year. That is a ton. And up to 73 million ounces. And you can see that broken out into two separate charts, jewelry and silverware. Silverware is actually doing really well. Now you can see India's got a lot of it, but the rest of the world is also using it for that purpose as well. And then finally, we get to the investment side. Bar and coin investment up 18% to 329 million ounces. So according to Metal Focus, we know essentially what's causing the increase. We had a big increase in jewelry and silverware, a big increase in industrial demand, and a big increase in bar and coin investment. And it's the jewelry, however, that's the highest, and a lot of it to India because of their economic situation. And what that tells us is when you have economic problems, India basically has to reset their paper currency. They have to put capital controls in place to discourage imports of gold into their economy and people buying gold in a culture in which they use a lot of gold for things like weddings and other ceremonies. The love trade's really big this time of year when they're buying it for their dowries and for their ceremonies and their outfits. They're not able to get it. So of course, a lot of it, the silver is going to go to India now. It's a replacement. And so I think this is a preview of what's going to happen in the US. Now you can see that US demand is very strong. That's the orange. We've seen a nice little uptick in 2022 after 2020 and 2018 when it was very slow. So much more bar and coin investment in silver the last 3 years. You can see this uptrend the last couple of 3 years, dating back to 2019. When the world basically has been jumping into silver. You can see here global demand is up 16%. The world now is demanding 16% more silver than last year. Last year, they wanted 1.04 billion ounces. Now they want 1.2 billion ounces. The problem is the global supply only went up 2% from 998 million ounces to just over 1 billion. So this number would be great if we're talking about last year because it's almost the same. But we're up more, and so that deficit has increased. And what does a deficit look like? Well, it's increased to 194 million ounces, the biggest in a very, very long time. But look at this chart. Look at the surpluses the mines were running through 2020, with a couple of exceptions here and there. There are a couple of years in which they didn't, but for the most part, we had above ground stockpiles. We had more mine production than demand. And then boom, you restart the economy, and it's like it just falls off a cliff. And it started here. This is Silver Squeeze, ladies and gentlemen. This is the beginning of 2021. This is Silver Squeeze right here. And this is the additional demand here for silver. That's why you're seeing bigger deficits. A lot of it does have to do with investment, bar and coin. Here's bar and coin investment up 18%. Now, a lot of it has to do with jewelry, which I also classify, even though jewelry is jewelry, I classify as an investment because you're going to keep it and it holds its value over time. So overall, to recap, a lot more silver demand, a little bit more supply, but not enough to make up the difference. Even though silver is quote unquote underperformed for the year compared to gold, and maybe people thought it would be, it's actually done, gold and silver have done much better than the stock markets, for example, the bond markets. We've talked about that on the program a lot. So overall, gold and silver both are doing what they're intended to do. They're taking investment. Obviously, that's increasing, and people are buying them because they want them. And overall, even though we have all of that betting going on in the spot gold and silver market that are paper-based, despite all that, gold and silver have still held up better this year than most of the rest of the investment landscape. And I think that shows you that gold and silver are really doing what they're supposed to be doing. And I think if we continue to run those deficits, we're going to see much higher prices, because eventually people are going to say, if you don't have the physical, we need higher prices, and the derivative market's going to flip and that spot price is going to rise. And that will happen as the deficits come more into focus and more people are aware of them. I think the top 2 to 3% of the market is aware of them, but I don't think everybody's aware of them. And I think when people start to get aware of them is when you'll see the spike in price. I also wanted to share something else for you guys I thought was very interesting. This is something my friend Chris Marcus put out on his channel, on his Twitter not too long ago. He found this very interesting clip And I'm just going to read to you what he says. Interesting note from the LBMA silver webinar, where even their analysts acknowledge the silver price has little to do with supply and demand, and that it's the tail wagging the dog, meaning the derivatives market drives that spot price, not the physical trade. These are some market experts in here from LBMA. What's the LBMA? London Bullion Association, which basically facilitates the London silver and gold market. Listen to what they have to say in this video. Sorry, I need to put the sound out. We'll get the sound shared, and this is just astounding. This really is astounding. I want you guys really just to listen to what they have to say here.
The early part of September through to the peak in the rally, which was sort of mid-October, the silver price actually moved by 5%. And a lot of that was driven by the short covering coming through the financial sector. So that's one of the reasons why the spot prices don't necessarily reflect the fundamentals. They always do at bottom, but you've got this noise that's built in because of the activity in the futures markets.
Because the tail is wagging the dog then, right?
Yes.
So essentially what they're saying, the tail wagging the dog, means the derivative trade is driving the prices, not the physical trade. And this is admitted to on an LBMA webinar. They're basically saying that, yes, the derivative markets determine price. No, it is not really a legitimate price that you would think of. And we know this, and we're going to talk about it and put it on LBMA. I don't even know what else to say about that. You have market participants at a sponsored, I guess, virtual conference or interview from one of the exchanges saying, yeah, the spot prices have nothing to do with physical. Well, yeah, we know. It's just funny to see people at an industry event like that talking about that. It's just astounding. And they're just basically saying what we all know because we cover the market. And I don't mean to belabor that point, but I mean, that's essentially what's going on. And so I think if you're into gold and silver and you believe in that market, now's probably the time to get into that market and to participate. Because if you have industry professionals saying, yeah, price does not reflect true supply and demand, and we see that report that I put out at the beginning of this video from the Silver Institute, the best data we have that they're reporting that we're going to have our biggest silver deficit basically in the last 15, 20 years that we even know about. And at some point, you have to think that that silver price is going to reflect market dynamics. And it will when the players on the market, the derivative spot paper market, are forced to recognize them. But right now, as you saw from the two LBMA or the two commentators on the market about the LBMA, they know that the spot price is has nothing to do with the reality of the physical trade. In other words, the spot price shouldn't be determining the price that we all use to buy and sell silver. And if that's, I don't know what else, I don't know how else to present that, but they know. And you're going to see an interview I'm going to have with Lynette Zhang of ITM Trading come out on Thursday. We just got done with that interview. And we're going to talk about people in the system. And I said this to Lynette. I said, I think there's some white hats out there, white hats, and some good people that aren't here to manipulate the markets or create a system that benefits them. They're good people. And she challenged me on that. And she said, I think a lot of them know. And I think a lot of them do. I think you have to agree. And that video is just proof of it. People that participate in the market know it's not, the market is not to set the price for physical. It's for the paper, it's for betting, it's for paper trading. And so we, when people ask me about, well, why isn't silver just going to the moon? It's like, well, you have all this paper about thousands of times what the actual physical trade in a given month. The physical really only trades in 6 months a year on the exchange in any sort of amount, because the other 6 months are considered off months. You can still deliver, but there's not a lot of deliveries. So you have a market that delivers 6 months out of the year, a fraction of what's traded in paper. You have two people from LBMA coming out and saying, yeah, the two markets are separate. We know that from the data, but they're admitting it, and they're analysts in that market. So at what point do we just say the current prices have nothing to do with reality? And if we understand that, and then you get into the physical metals, understanding that that dynamic has to change eventually, because it always does. You can manipulate something until a point in which everybody knows. And then the people piling in are basically going to turn that around, in other words. And I think here, the cure for low prices is low prices. Eventually, people are going to say the price must move. All right. Last bit on the show today. This one's going to be a bit shorter because I think we have already talked about a lot, and it is a point that needed to be reemphasized. I want to take you to the webpage because we do provide precious metals to people. It does help the channel when you do that. We will get a little bit of a benefit from it. We certainly don't make a lot, but again, we do it as a service to help the channel, but also because we believe in the providers providing it. So we do have providers here at the website. If you go to goldsilverpros.com and click on the precious metals link, you'll get the 3 that we recommend: Kinesis, 𝙎𝙬𝙇, Bullion, and 𝙬𝙁𝙃. And for today, I just want to talk a little bit about 𝙬𝙃. You can get access to 𝙬𝙃 simply by clicking on this link on the website and filling out the form. Ian will get back to you and make sure that you whitelist this email and this phone number. But what he has is some great metal. He sells mostly silver, has some gold. He has his own wholesalers. He cuts out the middleman and offers it at a premium lower than most people. And this is a piece that I basically got from him and Jim, who runs Silverback. They basically partnered up. Those you may remember, about a year ago, I bought a 1,000-ounce silver bar off of the COMEX, had it drop ship, threw Ian at Arc Silver to my door. And on his website, I've got my unboxing video on his website showing you this bar from Korea Zinc. Well, Jim at Silverback took it and chopped it up. He gave me a little, I think it's like a 20-ounce slice. And he's got it dated here. It says Gold Silver Pros on it because that was my bar. You can see right here, Rob Kientz Gold Silver Pros. That's the bar number at the top. And I think that's the amount of ounces we had in that bar. And of course, he's got his custom Silverback precious metals stamp there. You can get these really cool 10 and 25-ounce slices of a COMEX 1,000-ounce bar like I have, simply by going to Arc Silver at our website, goldsilverpros.com, click on the Arc Silver form, fill that out, and you can get one of those, or you can get your rounds and bars if you wish. Fully recommend Arc Silver. I've had no complaints. I've known Ian for several years. He's a great guy, has a great business, and I think he's going to beat anybody's prices at Gold Silver. All right, wrapping up the poll, we have 93 votes. How long before buyers cannot find any more silver? A third of you exactly said 6 months. A third of you said a year, and the other third is divided between 2 to 5 years, somewhere in that range. Thank you guys for voting in the poll. Today's presentation was over the interim market silver report and how it shows the silver shortages, physical shortages exploding in 2023. We also had the emission from 2 analysts speaking about the LBMA, about how essentially in a webinar that the spot market has nothing to do with physical. And as the gentleman says, the derivative market wags the dog, the tail wagging the dog, meaning it drives prices, not the physical trade. I mean, when you have people that follow that market that come out and admit it, I don't even have to say anything. It's basically manipulation is what they're saying. They're saying the commodity markets are manipulated, and I have to agree with them. But what that means, all that does is for us, ladies and gentlemen, it creates a situation in which we can get into gold and silver cheaper than they would otherwise be, and that gives you an advantage. We know the Great Reset is coming. This gives you an advantage. And if you're interested, we do have gold and silver people who can help you out. If you're interested, do your research, decide for yourself. But that's what I'm doing. I'm buying the bar. You know, I'm buying all the gold and silver I can get my hands on because I understand those dynamics, which I showed you today, the deficits, and then the emission from 2 analysts talking about the LBMA and how the spot price has nothing to do with physical, which creates a situation in which that will eventually change. The market will make it change when the natural laws of supply and demand are asserted, meaning when we're running out of enough silver to keep up that Ponzi scheme in the silver market, that derivative Ponzi, and how you're going to see higher silver prices. Why? Most silver is industrial use and you need it. And at the same time, when people figure out silver is mispriced, the amount of investment demand you see coming in is going to be absolutely astounding. And so I think, when is that going to happen? I don't know. That's why I put the poll out to get your opinion. We don't really call dates here specifically. We just follow the trends and we tell you what's happening. And then I think you can clearly see that this is probably coming sooner rather than later. Last thing I wanted to put out there for you guys, we do have a subscription service on YouTube. You can do it right here on YouTube. It's called Rob Kientz Unfiltered. And you get a lot of my opinions that I won't put out on the regular channel because while they're backed up by data, they are my speculations on what I think is happening. And I think that's the right place to put it. You can only get them by supporting us there. There are two levels. The first level is just supporting us for what we already do. If you want that unfiltered, there's another level for you there as well. Of course, all the free stuff we put out on the channel is always going to be here. We're not going to change that. So if you're just here for the free info, please continue to come back. We got a lot of other videos. All you got to do is click on those video links. We got a bunch of them organized in handy playlist. You can stay on the channel and review that information. And of course, please comment below and let us know what you think of the video and your opinions. We love to interact with you, and it helps give us some insight into maybe what else you guys want to look at and want to know, because that's what we do here at Gold Silver Pros. We're education and research service. Thank you guys so much for joining the program. We do appreciate it. We do this every Tuesday live at 5:30 p.m. Central Time, 6:30 p.m. Eastern Time, where we provide what we think is the best research. And we have this great community of you guys here in the chat, killing it, absolutely killing it with your questions and your participation. I think we are up to 200 now. That's great for a live stream on a Tuesday. A comment from John Bethea is one of our regulars. I saw a guy sawing up bars that he said he only sold to wholesalers. Yes, I think Jim Forsyth does cut up bars, and he has a wholesale business. He didn't do retail. It's harder for him to do. It's better to sell in bulk. So he does do bulk. He wholesales it to Ian. You can get the bar from Ian through our relationship. Ian does get preferred pricing. So if you do want a slice like this, I think Jim sold all the ones that came from my bar. I got this one. The rest of them you can get through Arc Silver. Jim will slice those up. Arc Silver sells them, and you'll get this really cheap because they get access to these bars really, really cheap. It's like $1 or $1.50, depending on supply and demand per ounce for the entire bar. And then they do very little markup on the slices, just enough to basically pay for them doing it. Really cheap way to get cool and historic silver. I love this because it's got the bar number, it's got my name, it's got, I mean, this is all custom, right? And how cool would that be to run this down to your local coin dealer and say, hey, yeah, I had a buddy who cut up a bunch of 1,000-ounce COMEX bars, and I got this really cool piece. You interested? This would be like a little display piece for him that most of these local dealers aren't going to have. And of course, you can just keep it in your inventory. All right, that's going to do it for today, guys. Thank you, everybody, for joining the program. Thank you, Peter Froheim, for being here riding shotgun. Thank you for all the subscribers to the service on YouTube. Remember, you can subscribe for just a couple of bucks to help the channel. I think it's less than 20 bucks a month to get the Unfiltereds, where I go much deeper into some of these subjects than I will do on this channel. You can only get it there, but we still have the free stuff, and we got more stuff to click on to keep you on the channel because we want to keep you here. Appreciate it so much. That's going to be it for today. Remember, tomorrow I've got an interview with Mr. Lior Gantz, and he's going to tell us why he's super bullish on gold and silver, and maybe some tech opportunities on the other side of the reset. That's coming tomorrow night. And then a super special interview, an encore interview. The return of the very first interview I've ever had on Gold Silver Pros is Lynette Zhang of ITM Trading. She's back, and she is Lynette. And that is going to be a treat for you because this woman understands monetary history better than anybody I've ever met. And that is going to be a real treat. Until next time, this is Rob Kientz with Gold Silver Pros. Keep on stacking, guys.